Welcome to Global Tax Talk. I'm Will Morris, and I'm delighted to be joined today by Eugen Trombitas, who is our leading global indirect tax policy expert. He's been doing this for a very long time, currently with the Irish firm, but prior to that was in New Zealand. So Eugen, or as I'm going to call you, ET, because that's what we all call you, welcome to GTT.
Hi Will, great to be with you.
Good. So let's kick off. And the first thing that I always do in these circumstances is to say that we have this huge mass of direct tax people, but actually really indirect tax is much more important. We pay it almost no attention, but you're here today, which is the great thing. And obviously there's a huge amount of revenue, there's a huge amount of compliance. Many things that corporates do where actually VAT, GSTs, other types of indirect taxes are at least as important as direct tax. So I want to talk a little about that. And there's a lot of emphasis from governments now on really how to collect VAT, GSTs, even customs duties, other types of indirect taxes better, and also, where possible at least, to reduce the compliance burden. And one of the areas that we're seeing that in, where we're actually filming, is within the EU. So can you tell us a little about VAT in the digital age, or ViDA? So what's it about? Why might it be stuck? And what do businesses need to be thinking about this?
Thanks, Will. Look, really happy to cover all that, and I absolutely agree with your sentiment about the importance of indirect tax. So in terms of ViDA, and we actually have our pillars as well. The three pillars of ViDA.
Lucky you.
The first one is digital reporting and e-invoicing. The move there is to move to real-time reporting, which is a global trend. So that's the first pillar. The second pillar is platforms. I'll talk more about that. That's the one that's become unstuck, or no cigar yet, as we might say. And the third one is simplifying VAT registration for multi-country trades, which is a good thing. Yep. So in terms of where we've got to so far, a very important council, the Economic and Financial Affairs Council of the EU, which is the Economic and Finance Ministers of the EU, hugely powerful body, has got to agreement on pillars 1, digital reporting and e-invoicing, and 3, simplified VAT registration, but not on platforms. Okay. So we need to move to the next stage of that, and I can expand on that in terms of what the issue is and where it might go.
Yeah. Okay. So what is that issue, and is there one country in particular that's having an issue with this?
Yeah. So when it comes to remote sales, we've got established rules in VAT in terms of how we tax that, right? And it's essentially the service provided by the platform from offshore. Right. But when it comes to this particular issue, as far as ViDA is concerned, the desire is to tax the platform on not just their facilitation services, but the actual underlying supply for 2 services, ride sharing and short-term accommodation. Okay. And Estonia has objected to say, no, this is effectively a new platform tax. You don't need the remote sales rules. You can apply the local rules. And in particular, if you've got small traders who are not VAT registered, to actually impose the burden on the platform would be A, a new tax, and B, create compliance burdens. So that's where we've got to. That needs to be worked through in the compromise discussions, which will unfold over the next few months. But the good news is that other countries have found solutions, so I'm actually hopeful that we'll get there. It might take a bit of time because of the democratic process that's being followed.
Sure. But obviously there's a lot of good news in the rest of the ViDA proposal.
Absolutely. There is. The unfortunate thing is, in terms of how it's working, is that the whole thing has to pass as a package. So we need all 3. We can't have one that's lagging or not agreed, but I'm actually hopeful. The only little footnote is that we're hoping that under the Hungarian presidency, which is newly established for the rest of the year, we were hoping to see an agenda item for ViDA to see if we can resolve that sooner rather than later. It's not on the agenda for July. It could be on the agenda for October and November meetings. Okay. So again, the cigars are under lock, but we've got them. Right. We've got the matches. So it's a really important package of reform. Yeah. So we're hoping that it'll pass through shortly. Good. Okay. Well, thanks for that. And yes, I think we do. We all hope that. So moving on, we've talked in the context of Pillar 1, which has elements both of direct tax and indirect tax in there. But we're hearing quite a lot in that indirect tax space about revenue lost by less developed countries, both in terms of the transactions going online and therefore moving out of the physical space, where both the indirect tax rules as well as customs duty rules apply more easily.
So they're talking about imposing taxes on digital transactions, quite often on a gross basis tax. Again, a gross basis, so closer to indirect tax than to direct tax. At the same time, the developed countries are pushing back on that and saying, well, there's a bunch of disadvantages about this. So what are companies, businesses facing in this space?
Yes, well, it's a good question. Quite a crowded tax landscape is the short answer, and I think you've heard me say that before.
Yep.
I think to build a picture around digital services and where we might get to with duties and tariffs, if you go back, say, 8 or 9 years ago, the OECD has produced a really excellent framework for countries to impose VAT on remote sales. So I'm talking about digital services where the likes of you and me are consuming services, but the seller or the platform is offshore.
Right.
It's both services and goods. So if you think of movie downloads and music and the stuff that ends up turning up in courier when you're on a call,
right,
and you get the knock on the door or the bell. So that is working really well. Well-formed rules in terms of VAT, generating significant revenue. And I'm talking in terms of digital services. Over 100 countries are on board and more to come. Okay. Low-value goods, a great number of countries are coming. Footnote, we need to resolve this platform issue. And where will that go in terms of some of the stuff that's playing out in ViDA? And there are solutions to that around information reporting and really allowing the local rules to apply rather than have the platforms account for the VAT. That's the VAT side working very well. However, in the background, there has been this sleeping giant since 1998.
Right.
And this is the WTO, the World Trade Organization, that has over 160 members, has a moratorium and has basically had agreement from all the countries to say no duty or tariffs on electronic transmissions. And that is now, I think, being firmly shaken by a number of countries saying, no, we want to impose some duty on that. Now, that has challenges, and the reason why this is important is that global trade in services is 15,000 billion US dollars. A large chunk of that is cross-border trade and services, and they're growing annually at 9% per annum plus.
Right.
So a number of countries are saying, we want to be there. Why are we having this moratorium? And I think we've got to really think this carefully through. The moratorium at the last ministerial conference is set to expire by 31 March 2026 at the latest.
Right.
And so over the next year or so, we can expect to see countries moving on what do we want to tax and how do we want to collect it. My personal view is that there are challenges.
Yep.
Basic examples like, do you want to tax advertising and insurance under customs duty rules? I mean, that's a big question. So we need to kind of create the design and make it as easy as possible. And not everyone will be on board. Not everyone will decide to impose duty on digital services.
Right.
And there's a further issue about what do you do if you already impose VAT. So there's plenty coming down the line in the digital services area to add to the current landscape.
Right. Okay. Well, this is obviously something we need to continue to watch, and we'll get you back to talk more about this. So one final thing, and the WTO provides a segue here. But we've been hearing a lot in the Pillar 2 space about replacing what I would call normal credits, tax expenditure credits, non-refundable credits, with grants, subsidies, refundable credits. And at least for some people, this has raised the issue of, well, are these unfair, are these distortive subsidies? And that can apply both under WTO rules. It also has implications for the foreign subsidies reg and for reporting that for government support outside of the EU. So again, can you unpack this for us just a little bit, what the rules are there, and again, how this might impact business going forward?
Yes, look, it's another good question, and I think the question is raising the really important intersection with direct tax, customs, VAT, and how it impacts international trade. And in terms of the current framework, without getting into the detail of EU state aid and foreign subsidies regulations,
yes, we probably don't have the time for that.
Just to stick on the WTO.
Yep.
And again, another feature of the last century, in fact, is the WTO agreement on subsidies and countervailing measures. It's a 95 vintage.
Yep.
And what that basically says is that if a country, a public body or government, gives their local businesses a subsidy, key point, it can be a tax credit. So this is kind of how it plays into the tax angle and tax space. And if it's unfair or prejudices other international competitors, both in the local market or in the export market, then that can be dealt to.
Yep.
You either take away the subsidy or you impose a countervailing duty. And in the last 25 years, there's been something like 650 investigations, half of them successful. So you're looking at about 30 a year or 2 or 3 a month. It doesn't sound like a lot, but if you've got a supply chain where you're buying stuff that is ultimately remedied through one of these measures, that could be costly to business. It just gives you a disruption that you can basically, avoid.
Right.
And the way to avoid it is to actually just be diligent about, what does your supply chain look like, where you're sourcing your materials from.
Right.
A lot of this information is actually published in terms of where the investigations have been unfolding in respect of what types of goods. So really heightened awareness, more fragmentation, and just be careful out there is the key message. But things are certainly not quieting down; they are ramping up.
Good.
But that is one area that's really emerging as this intersection that we've talked about.
Great. Well, ET, as I said right at the beginning of this, indirect taxes is actually incredibly important, and you've given us 3 good reasons why it is, all of which I think we're going to need to return to. So thank you very much for joining us. And thank you also for joining us, and come back next time on Global Tax Talk so that you are global tax ready.